Hello, I'm Catrina M. Craft, and you've just tuned into the Craft More Cash podcast, where finance meets innovation and strategy becomes reality. I'm on a mission to equip business founders with the financial savvy they need to grow real wealth. So buckle up and let's dive into the world of financial success, innovative strategies, and the stories that make us all want to keep pushing forward. Welcome to Craft More Cash. Let's make wealth building simple, fun, and effective. Ready to transform your financial journey? Let's start crafting. In this episode, we're going to talk about how you need to stop overpaying the IRS, but still know how to calculate the proper taxes for the IRS and your state to make sure you're not subject to the late payment, as well as the estimated tax penalties for not estimating the proper amount and paying it in time. Welcome to Craft More Cash podcast, where we help entrepreneurs keep more of what they earn and pay less taxes and grow their wealth. I'm your host, Catrina Craft, and today we're going to talk about something that costs most coaches, creators, consultants, and info product creators thousands of dollars every year, and that is ineffective tax planning. If you're making 6 or 7 figures in your coaching or consulting business, you're likely overpaying the IRS by 25% or more. That's what I've seen. So I'm talking about 25% could be $25,000 to over $150,000 every year that you could be funding your dream vacation, purchasing the home that you've always envisioned, or put money into your company to grow it. As a tax strategist for over 20 years, I've helped coaches and consultants really map out a plan, and that plan is called Craft Money Map Formula. It's a formula to drastically reduce the tax burden, but it also, during that process, will helping you to build wealth, to come up with a strategy that allows you the financial freedom that you want and peace of mind knowing that you have a plan. So again, welcome to the show. But before we dive in, I need to remind all of the listeners out there that this podcast is for educational purposes only, and it's not intended as specific tax advice. You always need to consult with your own tax professional before implementing any strategies that we discussed today, because every situation is different. That's why it's important to work with a strategist that could customize your plan based on your goals, your company, your model, and what is happening in your life. The biggest problem I see is that most successful coaches and consultants are operating with a fundamental misunderstanding about taxes. They think I make high income, that automatically means high taxes. And that's simply not true. When clients come to me, sometimes after having paid $50,000 or even $100,000 up to $150,000 in taxes annually, it's been too much because they've been told by their accountants, that's just what you owe. But high income does not automatically mean high taxes. It's simply not true. The reality is very different. And the problem is that most coaches, consultants, creators, and info product developers, they're using these cookie cutter tax approaches that are designed for employees and maybe smaller businesses, but not designed for business owners in your business model and with your type of income. Also, I've seen oftentimes the coaches, creators, consultants, and info product developers are focusing exclusively on increasing sales so that they can just pay more to the IRS. They need more money so they can keep more in their pocket. But they're completely ignoring the financial strategies that could help you and really help keep significantly more than what you earn. And you know that's really a massive problem. And I think this happens because most tax professionals are focused on compliance. That means they're just focused on preparing the tax return and making sure the tax return is right. But sure, you can file your taxes correctly and on time, but there's a world of difference between tax compliance and tax strategy. Traditional accountants typically use a one size fits all approach. They're looking backwards. So looking at what happened last year rather than proactively planning for tax savings. Really, most importantly, they don't understand the unique tax opportunities available to coaches, consultants, creators, and info product developers. Specifically, this industry and what you do is different. So those accountants are playing defense instead of offense. And playing defense is costing you six figures every year because you are not doing strategic planning. So let's talk about the real solution. Most of our listeners, you may have heard that you should just save 30% of your income for taxes. That's a cookie cutter approach. How do you know that you need to save 30%? How do you know that you're not maximizing your deductions? How do you know that you're not putting aside monies in retirements that could reduce your income and therefore reduce the taxes that you need to pay? So you may be asking me, well, is that good advice? Is that good advice to save 30%? I think that's a problem because it assumes that taxes are fixed and unavoidable. But what I tell my clients is that we shouldn't just be focused on saving for taxes. We should be focused on legally reducing them. Legally reducing them. That's what the focus should be. So the 30% rule might be a good starting point. So if you don't really have a tax strategy whatsoever, then okay, do that. But my clients typically end up setting aside much less than that because we implement proper tax planning. Here's what's most important that maybe tax preparers or your tax preparer accountant hadn't told you is the tax code is essentially a series of incentives designed to reward certain behaviors, but only when you know how to structure your business and financial activities to align with these incentives. That's the only time you can dramatically reduce your tax burden. Let me give you some concrete examples of how this works. For instance, most coaches, consultants, creators, and info product developers are operating as a single member LLC or sole proprietorship. So you can be an LLC, but if it's just you as the owner or member, you're operating as a sole proprietorship. So you may not have some tax advantages, such as if you were to operate as an S Corp and structure as an S Corp, you could save immediate taxes. That's one of the work hard strategies that I really like to implement and utilize. So simply changing your entity structure can save you tens of thousands in taxes, but you need to know how to do it properly, and there's timelines on when you have to do it to be accepted. Another example is retirement planning. Most coaches, they focus solely on maybe a SEP IRA because it's easy and you can do it up to the tax deadline. But there are advanced retirement structures that can allow you to put away 2 to 3 times more money tax free. Why wouldn't you want to do that? And then there's also the area of business deductions because most in this industry are either too conservative, so you're missing deductions, legitimate deductions. There's so many that you can do, especially as a creator, or you're being too aggressive. So you're taking deductions that could trigger an audit. The right approach is to have a systematic strategy for maximizing every deduction you're legally entitled to. So let's talk about the different savings methods for taxes. So if you must and you don't have a tax strategy, let's talk about the different methods for tax savings. Again, use the rule 30%. I don't recommend it. You need to come to a tax strategist, but you would have a payment plan method and you could pay monthly or yearly but it depends on when you earn that money. When are your estimated taxes due? So you really need to use useful tools that are going to help you address when and how much are these taxes that I need to pay. There are softwares out there that may help you do the estimated taxes, but what they don't help you do is strategize to see how you can reduce those taxes. They're just going to give you that cookie cutter approach that I talked about. The method that I want you to implement is reducing the amount you owe in the first place. Because when we work with our clients, we create a comprehensive tax plan, and it's going to give you a clear picture of what you actually owe. Then we can implement one of those savings methods. So we can implement, okay, you need to save this amount. It's going to be less than 30%, most likely. And you're prepared to pay that on time. We're working with you quarterly to make sure that you're doing the proper estimations and you're also paying on time. In the Craft Money Map formula, we have a framework called the Tax Architect Framework. It's really a modern approach that engineers, and we look at your entire tax strategy from the ground up. It's just not a one focus. We're looking at the holistic part. And we're just not accepting paying the tax. We're looking at the tax codes to try to reduce your tax burden. We want to legally reduce your tax liability. This framework has three components. First, we optimize your business structure. So we talked about how just doing an S corp could save you thousands. There may be a time where you want another structure in tandem. So you may want a C corp as a management company. We're looking at those entity structures to make sure what's going to be best for you and what's going to fit your goals. Second, we're going to implement strategic income timing allocation. So this involves intentionally controlling when and how you receive income to maximize your tax burden. So maybe you're at the end of the year and you're doing a launch. It may be better to wait and do a payment plan to receive that money in the next year. Or if you need the money this year, it may be best to offer incentives in your launch so you get the paid in full in the year that's coming up for the tax return. Third, we create a comprehensive deduction strategy that ensures that you're taking advantage of every legitimate deduction available to you as a business owner. So maybe you've never heard of a tax professional talk about taxes this way. And it could sound kind of like I'm approaching it differently and you're not sure it's legal. But believe me, we are supporting all of the deductions by code. We're making sure you're minimizing your tax burden. And we're looking at the wealth building strategy as a whole to make sure that you have the life that you dream of and you are planning for your financial future. Most people see taxes, especially business owners, as a necessary evil. But I see tax strategy as the fastest path to wealth for business owners. The tax code incentivizes business owners and investments. The code is made for us. When implemented correctly, our tax architect framework helps you achieve three results: a minimum 25% reduction in tax liability, an increase in your business profitability, and then you also have a clear path to building real wealth. And what's the best part of this? You don't really have to change your core business. You keep doing what you love, what you're good at: coaching, consulting, creating, developing products, while our strategies work in the background to reduce your tax burden. Everything we do is 100% legal and ethical. Believe me, it's legal and ethical. We're not talking about tax evasion. Don't do that. Don't do tax evasion. We're not talking about tricks that's going to get you in trouble. We're not talking about putting things on your return that shouldn't be, because that can get you in jail. And we definitely want to avoid jail. But what we are talking about is tax avoidance, which the Supreme Court has repeatedly affirmed is every taxpayer's right. This is your right. As Judge Hand famously said, anyone may arrange his affairs so that his taxes shall be as low as possible. He is not bound to choose that pattern which pays the treasury. He also said there are two systems of taxation in our country, one for the informed and one for the uninformed. So the strategies we implement are the same ones used by the wealthiest business owners in America. The only difference is that we're making these strategies accessible to coaches, creators, consultants, and info product developers who are 6 and 7 figure earners. You may not have access to some of the other tax strategists of the wealthiest, but we're using those same strategies, and we know and have a proven way that we use them for your business models.